Hey guys, Jared Wesley here of Live Traders, and I'm back with a trade idea today, a swing trading opportunity, something that's probably very shocking to you guys. You heard me. GameStop, GME. And as you guys also know, this is a stock that I've stayed away from, whether it's intraday trading it or swing trading it, because, well, it's been in the news quite a bit for the last 6 months, and it's been extremely whippy and extremely volatile. And I wouldn't think or say that it's something that newer traders should try to trade. If you have some experience, then perhaps this video is for you, because I think there is potentially some opportunity here over the next few weeks, over the next month in GameStop. Yes, I'm not kidding. No, it's not some fluffy thing. No, it's not some clickbait thing. I'm being serious. I think there's some opportunity in GameStop. So let's take a look at the chart for a second. We have the daily chart up, okay? This is a stock that obviously back in January, early mid-January, just went from like $3 or $4 and it went crazy stupid. Everyone knows about it. Went up to 400 and some bucks, right? It pulls all the way back, bounces again, pulls all the way back, and that's kind of where we're at now, bounced back up. So you'll notice it has a double or triple top in that 300 to 400 area. But if we look more recently on the daily chart, this pullback is actually relatively smooth, right? We're sitting here at this 208 to 210 area, and if you take a look, if we break above the $227 mark, you're triggering a little bit of a sloppy daily buy setup. But if we switch to the weekly time frame, take a look at that. Wow, that's actually a really pretty buy setup, okay? So if you take a look at the weekly chart, you have a trigger here somewhere in this 227 area, but the problem I see is a really wide stop loss. So this is kind of the conundrum with GameStop, okay? It's a very volatile, very news-related, very whippy stock. So if you give it too tight of a stop loss, you're probably going to be in a little bit of trouble. You might get shaken out of it, okay? If you give it too wide of a stop loss, you might not have a favorable risk to reward. So if you get in at 227 and then put your stop at like 197, something like that, have like a $30 stop loss, that's okay. It's very safe. Okay, but to get 2 to 1, 3 to 1, you need $60 to $90. You need this thing to go back to 300, which is possible. It's just you're not getting that much of a return for such a huge move. So this is how I would trade GameStop, guys. Okay, so this is going to kind of give you hopefully the best of both worlds. What I would do is I would start to leg in around 225 to 227, okay, using the wide stop loss, right, using 197. So you're going to leg in 225, 226, 227, okay, go with maybe a half lot smaller position with the wide stop loss, okay, and then when GameStop starts breaking above the 240 area, okay, which you can see to the left on the daily, there's a little bit of junk to the left there. That's right around 240. When it breaks 240, get full and raise your stop up to 205 to the 208 area, which is kind of where it's at today. Raise it up to like the 205 area. So your cost average on this should be somewhere in the low 230s, like 233, somewhere around there, and your stop loss might be around 207, okay? So it's not a huge improvement on the stop loss. Instead of having a $30 to $32 stop loss, you probably have a $25 to $26 stop loss. And then after that, I would take a look at the 60-minute chart and see if GameStop starts moving, breaking above 240 and 250, if there's a way that you can add and tighten your stop on the 60-minute chart. The problem is this stock is so whippy, it is so volatile that you can't give it a $5 stop loss, right? Normally on a $200 stock, you'd probably have a $5, maybe a $10 stop loss on the high side. Can't do that with GameStop. You're just going to get shaken out of it. So this isn't a trade for everybody. This is more of an advanced idea on a stock that can be whippy and volatile. But what I like about it is it put in a higher low 2 consecutive times here. So you have multiple higher lows. You do have that equal top, those equal topping tails in that 300 plus range, which is a little bit of a concern. But I think it's an interesting idea. Another stock you guys want to also keep an eye on is XPEV, XPEV, right? It has a daily 3-bar play that's forming, and if you take a look at it, it's actually pretty good, right? You have this wide range igniting bar, followed by a narrow range resting bar. Now, I understand it's second day up, But if this thing holds and maybe even rests for another day or two, I think XPEV could actually be an interesting idea to trade above this area, above the pivot to the left. So that one, you're not going to have to worry about a wide stop loss because the stop loss will be under the low of bar number 2 of the 3-bar play. So you have two ideas here. You have GameStop on GME, which is, again, a little bit more advanced, a little bit more aggressive despite the wide stop loss, where you're probably going to have to leg yourself into this, take a partial position, and then add back to it. And then you're going to have something like XPEV, where it's just a traditional 3-bar play. You get in above the high, but your stop under bar 2's low, and then you manage it out, okay? Look, as you guys know, I am not one of those people that trades meme stocks. I'm not one of those people who's going to trade a $1 penny stock and buy 50,000 shares of it and just hope it shoots up $1. That's not my style of trading. I'm a much more conservative trader, a much more consistent trader in that respect. So the same with GameStop. I'm just looking at the chart. Some of you guys are like, oh, he's just trying to clickbait. No, I'm just looking at the chart, and I think the chart is actually interesting. It's unfortunate that it's a meme stock, but the positive about being a meme stock is that, well, it could go $50 or $100 without much trouble, right? If it gets in the news again or something like that. Okay, but I'm just going after the pattern. We know this. Well, of course we know this. Why? Because GameStop's fundamentals suck. I mean, they're brutally bad. Like, there's no reason on God's green earth this should be a $200 stock right now. None whatsoever. Look at their earnings. They lose money most of the time. But I'm not trading the earnings. I'm trading the chart, okay? And if it doesn't work, you lose 1R. Whatever 1R is to you, $5, $500, $5,000, $50,000, you lose 1R. That's it. Okay, and the goal here would be get 3 to 4 to 1 out of this thing. All right, so I hope you guys take those ideas into consideration. We'll do a little checkup on these in a week or two, see where they're at, what they're doing. I'm Jared Wesley of Live Traders. I'll see you guys again soon.